Imagine waking up one morning to find that the home you thought was worth $500,000 is now worth less than the mortgage you still owe. Your neighbors are gone, the banks aren't answering, and the entire system, the one everyone said was too big to fail, is collapsing under its own weight. How did we get here? How did something as ordinary as buying a house lead to the biggest financial catastrophe since the Great Depression? This is the story of how easy money, cheap loans, blind optimism, and Wall Street greed built a fragile empire. An empire that looked unstoppable until the moment it all came crashing down. Welcome to the housing bubble. To understand how this empire began, we have to go back to a time when owning a home wasn't just a financial goal. It was the American dream. After World War II, millions of returning soldiers came home to a booming economy. Suburbs expanded, mortgages were cheap, and banks encouraged families to buy instead of rent. A house wasn't just a roof, it was a symbol of stability, success, and belonging. By the 1990s, homeownership had become almost sacred. A sign you had made it. But beneath that dream, something darker was forming. The government, banks, and Wall Street all discovered the same truth. Housing wasn't just a necessity. It was a goldmine. In the early 2000s, America entered an era of easy money. Interest rates were historically low. The Federal Reserve, led by Alan Greenspan, wanted to keep the economy growing after the dot-com crash of 2000. So money flooded into the system. Loans became cheaper and cheaper until almost anyone could get one. Banks started offering subprime mortgages, loans, to people with poor credit, unstable income, or no savings at all. Traditionally, these people would have been denied. Now, they were being told, congratulations, you've been approved. Why? Because Wall Street had found a way to make money no matter what. Instead of holding risky mortgages, banks began bundling them together into complex financial products called mortgage-backed securities. To investors, these bundles looked safe, diversified, profitable, and blessed by top credit rating agencies. But there was a catch. The system was built on one massive assumption, that home prices would never fall. The early 2000s became a frenzy of flipping, speculation, and greed. Ordinary people started buying houses not to live in them, but to sell them fast for a quick profit. House prices doubled in just a few years. Banks didn't just approve risky loans. They invented new ones. Adjustable rate mortgages, interest-only loans, negative amortization. These products sounded harmless, but they were financial time bombs. And the lenders, they didn't care. As long as they could sell the loans to Wall Street, who packaged them and sold them again to investors around the world, the cycle continued. Everyone got rich, on paper. The home buyer, the broker, the banker, the investor. But the profits weren't real. They were built on borrowed money, false ratings, and an illusion of endless growth. By 2006, the dream started to turn. Home prices stopped rising. Soothingly, those adjustable rate mortgages, the ones with low teaser rates, began resetting too much higher payments. Homeowners who could barely afford their first payments now faced monthly bills they couldn't possibly pay. Foreclosures began to spike. At first, banks brushed it off. The market always bounces back, they said. But the problem was no longer local. It was global. Those mortgage-backed securities had been sold to pension funds, hedge funds, and banks all over the world. The same system that had multiplied profits now multiplied losses. The year was 2007, and the cracks turned into earthquakes. Big lenders like Countrywide Financial and New Century collapsed. Then, the investment bank, Bear Stearns, fell. By 2008, it was clear the entire financial system was infected. When Lehman Brothers, one of Wall Street's oldest firms, declared bankruptcy on September 15, 2008, panic spread across the globe. Credit froze. Stock markets crashed. People lost homes, jobs, savings, everything. Within months, the illusion of stability vanished. The empire of easy money had finally turned to dust. The U.S. government stepped in with a $700 billion bailout, the Troubled Asset Relief Program, or TARP. Banks were rescued. Executives kept their bonuses, but millions of ordinary families lost everything. Entire neighborhoods turned into ghost towns. The middle class, once the proud backbone of the housing boom, was shattered. And yet, the most painful truth was this: the system didn't really change. Yes, new regulations were passed, but Wall Street grew bigger, richer, and more concentrated than ever. The too big to fail banks became even bigger. 17 years later, the same patterns are reemerging. House prices are again at record highs. Corporate investors now own massive shares of residential homes. And once again, interest rates and government policy are shaping who can afford to live where. Meanwhile, household debt has climbed to over $17 trillion. The highest in history, and the younger generation. Many feel the dream of owning a home has slipped away entirely. The bubble may not look the same this time, but the rhythm feels hauntingly familiar. Easy money. Rising prices. I believe that. This time, it's different. It never is. So, what can we learn from the rise and fall of the housing bubble? Asterisk first. Asterisk: when money becomes too easy, risk becomes invisible, until it's too late. Asterisk. Second asterisk: systems build on debt, not value, always collapse. Asterisk. And third, asterisk: history doesn't repeat, but it rims louder every time we refuse to listen. The next bubble might not be in housing. It could be in tech, crypto, or even government debt. But the pattern is the same. Greed, denial, collapse. The question isn't asterisk. If asterisk, it happens again. It's asterisk when asterisk. If you found this story eye-opening, help more people understand how fragile our economy really is, please like, share, and subscribe to Shadows of History, where we uncover the hidden truths behind the world's biggest financial disasters. Thank you for watching.